Okay, let's try this again. Oh boy. My name is Jeremiah Davis, aka your funding coach. I'm having some technical difficulties. I see some things that I don't like, but um, it's Monday and it's been a long day already. And my name is Jeremiah Davis, aka your funding coach, coming to you with Monday Fun Day, right? I am the CEO and owner of Business Funding Now, a loan brokerage company. I've been a loan broker for over 15 years, and um, I do Monday Fun Day to give tips. Now, I've been out of practice for almost a year, building things and automations in the background, staying up to date with AI, loan requirements, lender requirements, a whole plethora of things been going on. But I'm back and I'm trying to be consistent and give out these funding tips. So today's topic is top funding programs you can share to earn 40% commission. So if you don't know, I have an affiliate program. In the normal affiliate program, you just refer a deal. You don't have to, sell the funding or coerce your clients. Everybody, I know most all business owners need money, so you don't really have to um, do all that. We do all the work for you on the back end. Okay. So that's what I'm talking about is we're doing the work. You just referred. But instead of 25% commission, which is the normal affiliate commission structure that we use at BFN, Business Funding Now, I'm upping the commission to 40% until the end of the year, right? This is completely free. You can be an affiliate. You can send in as many clients. We'll work them. Listen, we don't get paid unless your clients get funded. Okay. So we have all the incentive to um, chase the client down, collect the supporting documents, and get them into the funding option that's best suited for them and that they qualify for. If you don't know, we also have our um, own in house pre qualification success scan, right? So the application, the link that you get, and the application that you use, it takes them a couple of minutes to fill it out, just the basic information that you need for any loan application. And within 60 seconds, less than 1 minute, that funding range report and um, gets sent to your client. Now, on that funding range report, they will have the loans that they pre-qualify for. And just hear me well, when I say pre-qualify, it's not pre-approved, right? It's just basically the data that they put on the form. They're potentially qualify for one or more of the 20 different loan products that we have. Okay, so that's like a game changer. There's some other people that have something similar, but ours not only comes with the loan types that they pre-qualify for, it also gives us a guesstimated funding range that they can possibly qualify for, as well as the links to upload the documents for those particular loan types. So they're not getting any loan types that they don't qualify for, and they're not loading up documents they don't need to upload um, for loans that they're not pre-qualified for. That speeds up the process exponentially because once we have those documents, we can match them, right? Your client or any client, if you're a business owner and you're needing funding and you've been chasing your tail, get denied, and going after loan products that you don't qualify for, and you just end up getting denied, then go to businessfundingnow.com, click apply now, fill out the quick form, and see what you pre-qualify for. Now, obviously, you have to be honest on the form. If you say you have a 700 credit and you got a 630 credit, you're not going to get the same pre-qualifications. Okay, so that's a common thing that happens. People, exaggerate about their income, exaggerate about their credit, and that changes the whole algorithm. So you're going to get pre-qualified for things that you can't qualify for. Okay, so we're not asking anything crazy. What's your monthly revenue? What's your credit score? Things like that. What type of business you have. Where you're located. The basic information that we need. But all that information, that form becomes the application that we submit to the lenders along with the supporting documents. So it's critical that you put the right information on there, the right contact information, or the right email on there. Because if we don't have that information and we send it to a lender and the lender can't get a hold of you, then you're not going to get the money. Okay, it doesn't help you to be exaggerate or not tell the complete truth on this loan application or this pre-qualification form. Okay, so that's critical. All right. But if you are already an existing affiliate or you have been an affiliate in the past, contact us and get your updated affiliate link to this pre-qualification form. You can put that link anywhere, send it out, put it in a nice email, send it out to your client list, text message, social media, what have you. And you might not, you don't know, you might be getting some loan offers or loan some application submission by just posting your link. Okay. And then once the deal is funded and we get paid, you get paid. Okay. And we have everything is automated and tracked and transparent. All right. It doesn't benefit me to deceive anybody. All right. I want to get as many loan applications as I can so I can get as many business owners funded as I can. So me and my affiliates, maybe that's you, can make as much money as you can just referring business loans. Okay. But 40% commission. What does that mean? What does that look like? So if we get $100,000 working capital loan, all right, the typical commission is going to be $10 to $12,000. It could be $8 to $12,000. It depends on the lender that we go with and our relationship with our lender and how much commission that we get from that lender. On an average, it's 8 to 12%. Okay, so that means $8 to $12,000 on a $100,000 loan, right? And if you got that, then you're looking at 40% of that. So let's say this split the difference and say it's $10,000, you get $4,000. But you don't have to do any of the work. That's the whole caveat. You don't have to do any of the work. All you got to do is get the client to fill out the form. That's all you got to do. We'll call them. We'll collect the documents. We'll walk them through the process, right? We're doing credit card stacking in-house. We got business term loans, SBA loans. We got working capital loans. We got 401k loans. We got ground up construction, anything real estate related in the business world, commercial, fix and flip, bridge, ground up construction, all that. We also do asset-based funding. So if you got a contract with the city or the state or the school district or the county or even the Fed, that contract can be used as collateral to get funding. If you own property, if you own investment property and you have equity in that, you can use that as collateral to get paid. This is asset-based funding. So whatever assets you have can be used as collateral to get the funding that you need. Okay. Say you don't have property. Maybe you have inventory. Maybe you have accounts receivable. Maybe you have invoices. All those things can be used to get funding. Okay. And then we have our credit-based programs. This is our top tier credit-based programs. You have to have a 680 plus credit. That's the credit card stacking. That's the business term loan, business line of credit, the SBA loans. All those loan products require you to have good personal credit, but most of them do require you to have good business credit as well, and a small business FICO score of a 155 or higher. All right. The small business FICO score goes from 0 to 300, 300 being a perfect. Okay. Which I've never seen one. I've seen them in the below 100 or in the low hundreds, or, I think the highest I've seen is like a 185. But that's here nor there. Okay. But now traditional banks and business term loan lenders are using the same matrix as the SBA and the small business FICO score. So if you're applying for a business term loan and you don't have a small business FICO score, then you might not get approved for a business term loan. And you definitely won't get approved for an SBA loan. Okay. There are some lines of credit that you can get approved for without a business credit score. And then there's also, like I said, working capital, right? The cash in your business is an asset. So when we talk about working capital, they're going to give you a percentage of your monthly revenue. They're going to average it over 3 to 4 months. That determines your credit might come into a factor in the interest rate and the term Okay, so if you got like a 650 credit score, you can get a decent term loan, all right, or fixed rate loans, what we call them, right? It's similar to a business term loan. You just pay a little higher interest, okay, and you don't need the small business FICO score. So that's what we're talking about. So the top five, I'm not gonna, and like I said, I had a long day, so I'm gonna keep this short and sweet. The top five loans that will make you the most money on a 40% commission split is obviously your MCA, your merchant cash advance. Now, let me speak on that for a moment. The merchant cash advance is like it sounds. It is a cash advance on future sales of your from your business, right? And most people don't like them. Most people run away from them. Most people, some people have had them, and maybe didn't wasn't able to manage it well and defaulted or got behind, or something. So we have solutions for that as well. We have MCA consolidations. We have some lenders now are coming to help you pay those off now, right, and get you into a better rate and a better term, and then get you out of those MCAs. So we have lenders for that as well. So that's a good option. But MCAs do pay the highest amount of commission because they charge the highest interest rate on those type of loans. I typically do not get my clients into anything that I wouldn't accept for myself. Okay. But sometimes it's the only option. So I call them a necessary evil. And if you manage it well and understand them, you can use it too as a stepping stone to get you into a better position, maybe pay that off faster and not keep it as long and pay the full amount, because most of them do have prepayment discounts, right? Not penalties, but discounts. So if you pay it off early, you pay less. So that's very beneficial as well. But considering on the average MCA loan, I make 10 to 12%. So that means you'll get 40% of that. So, sometimes that's the only option a business has. They need cash and they need cash now, and they might only qualify for an MCA loan. So that's number one. That's the number one. It's number one because we make the most money off of it. As simple as that. I'm just going to keep it real. Okay. The next one we're going to talk about is business line of credit. Business line of credit, right? These are hot right now. A lot of people want them and a lot of people are getting them. But I'm going to tell you the truth. There are a lot of lenders out there that are offering business line of credit as an MCA alternative. So they're similar in their structure, where you have make weekly or monthly payments. Right? I always steer clear, even with the MCAs, of daily payments. If I can get you a weekly or monthly payment, I'm going to go for that. If there's only option is a daily payment, then that's the only option. But I'm going to be honest with you, up front with you, so you know exactly what you're getting yourself into, and you're not going to get, and I'm going to help you manage it. Like, for example, say you got a $50,000 MCA or MCA alternative business line of credit, okay, and the payments say you draw all the money off the line of credit, or you use the $50,000. I always suggest to my clients to put the first several payments aside and then strategically use the other money to generate more revenue, right? So, for example, let's just say hypothetically your weekly payment for a $50,000 loan is $1,000 a week, okay? On the line of credit, you only pay back or interest on what you draw. So you say you didn't draw the whole 50, you draw like 10,000, then your payments are going to reflect the 10,000. Okay, so they might be $200 a week, right? And then and as you repay that money, your line of credit goes back up. Okay, so but you're only going to pay the interest on the amount that you draw. Okay, but the business line of credit is hot. So there's a lot of good business lines of credit that we have lenders that we work with that, and it's similar to a credit card. You have the account, you can transfer the money from the line of credit account to your bank account, your business checking account, which is established when you get approved for it and you get it all set up. And then that's how they deduct the payments for the amount that you draw. But putting those payments aside, say you put the first 2 months payments aside, right? And now you're not stressing out about making those weekly payments. And then you got that 2 month cushion to put it in marketing, put it in inventory, put it in staffing, whatever you need to put it in so you can generate more money. So this is how you strategically use these type of loans to benefit you, but not get you trapped and stuck in it. Okay. People don't usually think about that. They just think about the payments and not kind of strategize on how to use those payments to grow their business. And at the end of the day, the interest rate is not as important because it's money that you can use to generate more money. Okay. So if you give me $100,000 and I got to pay you back $125,000, I'm not thinking about that that extra $25,000 I got to pay you back. I'm thinking about what can I do to take that $100,000 and turn it into $200,000, right? If I can take $100,000 and turn it to $200,000 in the next couple of months, then I'm gonna pay back that 125, and then I got another 75,000 that I just made in the last 2 months, and I can reinvest that into my business. Okay, so that's how you're gonna think about these type of things: is how can you use the money to generate more revenue? That's what you want to do. Okay. All right. So we got MCA, we got business lines of credit. And then in the business line of credit, the qualifications are a lot less. You don't need a good credit score. You can get a business line of credit with like a 580, 600, 620 credit score. It depends on lender. Every lender has this separate criteria. But that's what we do here. We're going to match you with those lenders that your situation matches the lender's criteria. So we're not applying blindly to lenders that will not accept your package or your loan application. All right. All right. The next one is SBA Express loans. Now, SBA Express loans are a smaller amount, right? They go anywhere from about 50,000 up to 150,000. There's less paperwork, right? The credit score, you can get one for about 650 credit score. Usually you need to have 2 years in business and you need to be making about $20,000 a month. But if you can check those boxes and you have 2 years of tax returns, you check those boxes, then you could potentially get a SBA Express loan, okay? And that can be up to 10 years to pay that back. And those are going to be low interest rates and they're going to be monthly payments. So that's another good option is your SBA Express loan, okay? And trust me, when you put that data in there, the system is gonna pre-qualify you for that loan type, as well as match you with our lenders for that loan type. All right. The next one is equipment financing. Okay. So equipment financing comes in multiple categories. All right. You have the purchase of equipment. You have the lease of equipment. You have the lease sell back of the equipment where you already own the equipment outright and you're going to use it as collateral to borrow against. But you get to keep the equipment and use it while you use the money that you borrowed against it. Okay, so that is another good one. The commissions on that are a little bit less, but whatever we make, you make. And there's I have lenders that do 100% equipment financing. I got some that want to do 20% down. Either way, you can get equipment financing, and the credit score doesn't need to be high. You can have a 600 credit score and still get equipment financing. Okay. Some other things they don't like. They don't really like to finance anything less than 50,000. So, but I've done restaurants, right? A restaurant. They got tables and chairs. They got napkins and tablecloths. They got, silverware, china, all those things. And you got, fryers. So if like not one item meets the goal, you go to your supplier. You get a list of everything you want, like on an inventory list with the pricing, and that's what you submit with your application. So they can say, okay, the total for everything that you want to get for your restaurant or your food truck or your dump truck or your tractor trailer or, forklift, backhoe, it doesn't matter what type of equipment that you want to purchase. Okay. But your business also has to show that it can afford the payments. So your business has to be making money. If you're a startup, then that's most not going to be a good option for you because you don't have any business revenue. At the end of the day, all lenders want to know is that can you pay the money back? Okay, and can they trust you? So they're using all these metrics to see if they can trust you and you can pay the money back. So long as you show that, then you're good. Okay, credit is negotiable, or we'll find a lender that will work with your credit score. But if you don't have any business revenue, then you're stuck. You're going to be looking at the credit-based programs like your business credit cards, or business or startup business funding, which is basically a personal loan that you personally guarantee that you use to start your business, and it's going to be based off your personal credit score and your personal income. All right, the minimum income is $50,000 annual income for credit cards and startup business funding. So just keep that in mind. If you got a day job and you're starting your business and you need money to get your business going, then your day job should be providing you with at least $50,000 in annual income. But we can also use household income. So if you and your significant other make a combine of, say $80,000, both make $40,000 a piece, then we're still in there. Okay, so you can still utilize that type of funding. Okay. Do, 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 do. So I had MCA, MCA, business line of credit, SBA, equipment financing, and the one I've been mentioning all night is the startup business funding and business credit cards for new entrepreneurs. Okay. This is the most popular funding because all you need is good credit and income. Like I said, that $50,000 annual income to get into it. So I would suggest that you go ahead and go to businessfundingnow.com, complete that quick app, get your pre-qualification funding range report, and see what you qualify for. It's free. It's free. It don't cost you nothing. We don't sell your data. We don't share your data. We don't do any of that stuff. Because once you get into my ecosystem and get funding, I want you to keep coming back. Every time you need money or you need resources, business credit, business funding, you can come back here because we know we're going to treat you right and we're going to treat you fair and we're going to treat you like we want to be treated. And we're not. And listen, I'm going to say one more thing about all the funding that's going on, all these companies that are coming up. I mean, I don't know them all, and I don't have any reason to think they're not legit in any way. But I know their advertising and marketing is bait. Okay, they're throwing out too good to be true offers as bait, and it's getting many applications as they can, and then they're sifting through and just picking out the ones that they can work with. All right, all the rest of y'all are out. So what I'm saying is work with somebody that's going to be honest with you, straight up with you, and tell you the real deal on your funding options, the qualification requirements, the documents, the realistic. Okay, that's all I'm saying. Just work with somebody that you can trust, that you know is going to give you the right information and guide you down the right path. All right, we charge no upfront fees until after you and at all. When you get funding, either we get paid from the lender on the credit-based programs like the business term loans, lines of credit, and credit cards, startup business funding, we charge a success fee. All right, and that success fee is charged on the back end, not up front, on the back end. And we don't gouge you. We just want to be fair. If you're an affiliate and you need to get your new updated affiliate link with that quick app and that pre-qualification funding range report, then hit me up, send an email to support@businessfundingnow.com. Support@businessfundingnow.com, and get your updated link so you can make 40% commission now until the end of the year. Okay. And that's to December 31st. Okay. So 40% commission to all new and existing affiliates from now on to the end of the year. Those are 5 loan products that you can make 40% of commission on right now. Right now. And contrary to popular belief, this is one of the most busy seasons for funding is right before the holidays and during the holidays. Why? Because businesses need money to either ramp up for the holiday season or because they're slow during the holiday season. They both need both. So both business types need capital to get through this season. Okay. So it's a good opportunity to put your feelers out, get your contact list, get your link, and reach out to your list so you can know. I mean, like I said, everybody needs money. Everybody. Okay. Everybody needs money. So all you got to do is let them know that you have a resource to get them some money that they need during this time of the year. All right. That's my time for the day. And let me just go ahead and recap those 5 options again. Um, so working backwards, we got startup funding and business credit cards. Okay. Then we got equipment financing. Then we got SBA Express. And then we got business lines of credit, and then we got MCA. So those all can be funded and done within a matter of days, outside a couple of weeks. SBA Express should take more about 2 to 3 weeks. Equipment should take more than a week. But working capital, some of these business lines of credit, those take days. MCA, that can be same day, next day, 24 hours. Okay, so and not to mention the other 15 loan products that we offer as well will be available to you, and your clients can pre-qualify. Everything from 401k, the asset base, to equipment base and credit base. All funding falls into one of those categories. All right. I hope you guys enjoyed this. Please like, share, and follow me for more funding tips. And I'll see you next Monday for Monday Fun Day. My name is Jeremiah Davis. I'm your funding coach. Peace.